Welcome back. I hope you're having a fantastic day. And we are going to check in on the markets. Had another lackluster day on Wall Street today, just kind of strolling along, but we've had some activity in the crypto markets. So we will take a look at that right now. The Dow Jones finished 0.63 up, S&P 0.94, NASDAQ 0.5. But we do have some activity after hours, Facebook plunging about 20% since the closing. Because of lackluster earnings. So interesting times out there in the tech world as we move along. One thing to keep an eye on, and we've been talking about this lately, the black swan that could, affect projections and the path that we're on, is global conflict. So a Russian invasion of Ukraine could send shockwaves through the financial markets. Here's how. So there's analysts out there that are looking at the energy markets, that if Russia invades Ukraine, it could put pressure on oil and gas markets, which would drive prices higher, suck liquidity out of the stock markets, and we could see the stock market dip a little bit. And as we know, Bitcoin and the crypto markets are tracking the financial markets right now, traditional financial markets, stock markets. So we would see a dip in Bitcoin and crypto as well if Russia were to invade, especially if it becomes a serious global conflict with other countries getting into it. So that's escalating every day. Hopefully they'll work it out. They'll find a diplomatic solution, but we need to be prepared and ready in case the worst case scenario happens. On the legislative front, the provision in the House bill allowing the Treasury Secretary to block international crypto transactions is to be removed. So we've been talking about legislation and how and regulation, and how from an industry standpoint that would be a positive thing, although there will be unintended consequences that'll pop up. But the last couple of times that they've tried to legislate some things or propose legislation that had bad consequences, the lobbying groups in DC and the crypto community at large reaching out to their senators and representatives has created change. So a lot of times these things will come out, there'll be headlines, but there are lobbying groups in DC now that are lobbying on behalf of the crypto industry that are keeping these things in check. And as you see, getting these punitive things removed from potential legislation. So as a whole, from an industry standpoint, legislation, regulation will be good ultimately for more adoption, more participation in the space, which ultimately brings more investment capital to the space, which drives prices higher of assets across the board. That's what we need. That's what you want in order to continue the cycle that we've been on, especially since the Fed is out of action and they're not pumping liquidity into the markets. In order for the prices to continue to sustain and continue to go up, you need more investment capital coming into the space. And what people are hesitant about is the volatility and the lack of regulation. So again, with regulation will come unintended consequences, but we do have people that are keeping that in check in DC, and then the crypto community at large reaching out to their senators and their representatives. Some interesting things to keep an eye on in the future of the industry is leveraging your crypto holdings. Michael Saylor, great picture here, is exploring ways to use his Bitcoin holdings, which would ultimately be good for the industry as well. Borrowing, lending, leveraging his Bitcoin holdings. He made another purchase and market went down. What's interesting is the last several times that Michael Saylor has made purchases, the market dropped right after that. So coincidental or something going on there, who knows? Maybe the whales are trying to shake out one of the biggest whales and drop prices so they can get him to sell and get his coin. So we'll see how that shakes out. I don't know that that's a thing, but just kind of interesting parallels. But one of the interesting things to watch in the industry is more and more financial entities being created and or banks willing to participate and allow crypto and Bitcoin holders to use their coins as equity, as collateral, as leverage, so that they can get loans. So I think that's going to be a big space that will be developing. So we'll have to kind of follow those things and see how that all works out. So let's take a look at the markets. This is the hourly chart of Bitcoin here. And Bitcoin did have a bit of a down day. It's still in process right now. So far, it's dropped 5%, not huge. It can look kind of bad because it's kind of undone a lot of this sideways action that it's been grinding out over the last, several days. It's starting to unwind all that. The question is, where is it going to stop and where will we get that bounce? Because ultimately it's just kind of ranging like we talked about. We're working our way towards that bottoming process that we've been looking for, and it's starting to roll over, and maybe it works its way down to test this bottom range, that 36, 35, 36 range that we've been targeting, that I called out on January 14th, that I'm looking for in terms of that retracement up into this area of the Fibonacci retracement that we've been kind of looking at in terms of where it could potentially go. And that 0.5 to 618 range, 52 to 50, $55,000, $56,000 before it ultimately retreats. And then we find out, are we going to be in a longer bear market consolidation phase, or are we going to break through those Fibonacci levels and be off to all-time highs? And I think what potentially is going to happen is we're going to see a little bit of a rollover to retest these market structural lows. So what I'm looking for, to be clear, is I'm looking for right now for this to kind of continue down in this range here, maybe find a bottom, then ultimately retrace its way back up, roll over, come back down. Obviously, this is going to be over a period of time, could be weeks, could be months that this happens, and then roll back over and test some of these market structural lows here. And that's where we're going to find out, are we going into a longer term bear market, or are we going to bounce and then shoot back on up and then try to get to a new all-time high, break this previous all-time high, and figure out if we're going to break out of this range that we've been trading in for a while now with Bitcoin. And Gareth Soloway was on my channel. He'll be on again next week, where he drew this parallel channel here that Bitcoin's been kind of trading in. You're starting to see that now. He came out with that on my channel a couple of weeks ago. And after that day, everybody started identifying this parallel channel that Bitcoin's been trading in. That's not exactly, but it's been kind of ranging in this little channel here for the last number of weeks. And it looks like we might be testing or coming back down to test this at some point. So that's kind of what I'm thinking in terms of how we may be proceeding forward here. So I'm looking for that rollover to a bounce, come back to the retracement, ultimately bounce back down and test some of this market structural support to see if that 29, 30,000 previous market bottom is going to hold up. If that breaks, we're going to go back and test the 19, 20,000 previous all-time high, which should be your major market structural support. And I believe that would ultimately hold unless we have serious economic crisis due to global conflict or whatever else could happen in the markets that we're not foreseeing right now, another pandemic, surge, whatever. Those could be things that could be a catalyst for a big decline. But if everything remains as it is, the Fed is out of the game now. So this parabolic move that we had in 2020, 2021 was driven by the liquidity pumped into the markets. This was a manipulated move here for whales to, gain exit liquidity. So we've been working our way down ever since. So the real question is, without the Fed, without the easy money, without the cheap interest rates, where can we go to from here? So that's what we're looking for in Bitcoin. We're working our way over, and I'm thinking by, the middle of February, we should have this worked out and be onward through the retracement. Or if what invalidates that theory, if we break through and we start testing this low and break through that invalidates all of that. And then we may not get that retracement and ultimately the altcoin season that we're looking for. And on the topic of the altcoin season, here's the total altcoin market cap, excluding Bitcoin, total 2. And as we talked about before, we've already reached that 4236 extension from the last market cycle. So will we see a parabolic altcoin season like we saw in 2017, 2018, where everything just kind of ran, or 2018, 2019, where everything just ran at one time, all of them went off together? I don't know, because a lot of the altcoins have already run. They've already reached their 4236 extension. That would indicate that the top is in for the altcoin market. Ethereum that we talked about the other day has already achieved that and has gone on to, that's the Ethereum dominance. Here we go. Ethereum right here has already gone on to achieve its 4.236 extension from previous market cycles. So Ethereum could be done for this cycle. You might see some retracing, but there are coins that have not run yet. So that's what you want to do, is go through and identify those different coins that have not gone through that extension yet, and look through the list and kind of see some that may potentially be ready for a second run when Bitcoin does retrace and just kind of lag behind Bitcoin a little bit. So you may be able to find some of those when that happens. So those are the things that I'm looking out for. The other thing to watch out for is the Super Bowl. We have the Super Bowl coming up, and crypto.com is a big advertiser in the Super Bowl. So you might see a bounce in crypto.com leading up to the Super Bowl. And then just like we saw with Elon, that could be a buy the rumor, sell the news event where Dogecoin pumped up to the point that Elon appeared on Saturday Night Live, and then it's been downhill ever since. So crypto.com could pump into the Super Bowl and maybe have a little bit of a dip afterwards. But long term, it should do well in the long run, but we shall see. That's obviously another exchange that is gaining momentum, gaining traction, a lot of advertising, a lot of celebrity endorsements, but it also has its issues with some hacks and things like that have happened lately. But that's just something to keep an eye on. You could see a little bounce. I might make that play going into next week, the week before the Super Bowl, after this little sell-off that we're done with. When we get done with this little sell-off that we're experiencing right now, I might make an entry on crypto.com and kind of ride it out through the Super Bowl. So I'm kind of looking at that, see if it gets down to some of those price levels. But that's some of the stuff that I'm looking at and seeing for today. I hope you have a fantastic evening, afternoon, morning, wherever you're located. I'll see you on the next video.